Hi guys, welcome to a simpler approach. If you are new to the channel, please subscribe, like, comment, and share. In this lesson, we have a fairly easy topic, fairly easy. It has a lot of calculations, basic calculations, addition, multiplication, stuff like that. And if that's not an issue for you, then this topic will be pretty easy. We'll be looking at stock valuation. Let's dive right in. Our objectives for this lesson includes 1. To understand the concept of stock valuation. 2. To accurately prepare stock valuation using FIFO, LIFO, and AVCO. And 3. To calculate gross profit based on all 3 methods of stock valuation. When this lesson is finished, you should be able to do all 3. Let's go. First things first. Stock, otherwise called inventory. That's the name given to goods that are bought primarily for resale. So if you're operating a retail outlet, a supermarket, a clothing store, your inventory would be the items that you buy in order to sell to make profits. Now this can include raw materials, partially finished goods, or fully completed goods, whichever the case may be, depending on the entity. Stock valuation, therefore, is simply the process of calculating the value of stock. Now there are 3 methods of stock valuation: FIFO, LIFO, and AVCO. FIFO means first in, first out. And when you're using that method, you simply sell first the stock that you bought first. First in, first out. First set of stock that you bought is the first set of stock that you sell. Cool. LIFO, last in, first out. That means the last set of goods to come in is the first set of goods to go out. Last set you bought is the first set you sell. AVCO is the little tricky one. Now, AVCO is a method that dictates that the average cost for stock that is held is recalculated for resale. In other words, whenever you buy or sell goods, the average cost of the stock that you have on hand is always recalculated at each step. That is necessary for the process of selling the goods. Why? Because when goods are sold, they are always sold at the last calculated average cost. And that is why whenever it is bought or sold, the average has to be recalculated every time, so that when the time comes for items to be sold, the last calculated average cost is the cost that is used to sell. In order to bring the explanation of each method to life, we will be using the following example for all 3 methods. Now, this example you are looking at details information pertaining to stock that was bought and sold in the year 2016 from January to December. So January, we bought 10 items at $32 each. Then in May, we bought 15 at $35 each. Then in November, we bought 25 at $50 each. In June, we sold 12 items at $55 each. And in December, we sold 24 items at $70 each. Once again, this is the example that we will be using for all three methods. Okay, let's continue. This is what the FIFO method looks like. So we have date, received, issued, stock after each transaction, and two number columns, two amount columns. Number one, you always follow the natural month order of the year. Now, in the example, we see that the information was broken down into when items were bought and when items were sold. But if you look in the FIFO method before you, you would recognize that in the date column, everything follows the natural month order of the year. That's number one. Number two, the amount at which the item was sold for is not relevant in this case. We will get to the relevance of that amount. But for FIFO, LIFO, and AFCO, the amount that the item is sold for in the sold or in the sales section of the question is not relevant. Let me shed some light so you can see clearer. This 55 and this 70 is not an issue to be dealt with right now. It will be dealt with in a separate case, which we will come to at the end of the lesson. So for the sold section, we are only concerned with how much. So for June, we're only concerned with 12. For December, we're only concerned with 24. Okay? Bear that in mind. Let's go back to FIFO. So this is where some calculation really takes place in order to fulfill FIFO. So let's go. So in January, we bought 10 items at $32 each. Hence, it's in the received column because we bought it. What do we have after this transaction? We have 10 items at $32 each, valued at $320. Okay? Cool. In May, we bought 15 items at $35 each. What do we now have? We have the 10 at 32 that was bought in January. That is still there. There's no evidence of it being sold, so it is still there. Then we have the 15 at 35 that we just bought. How much do we have in total? 845. How do we come by this? The 320 that was there from January, see it there? And the 525 that was just bought. Add these two together, you get 845. Okay? Cool. In June, we sold 12 units of stock. Now watch this. This is where the little trick comes in. FIFO says first in, first out, which means the first set of goods that I bought is the first set of goods I'm going to sell. Now, if I look in the thing before me, I would recognize and remember that 10 at 32, which was bought in January, was the first set of goods that I bought, which means that's the first set of goods I'm going to sell. So, look how it works now. The person in June needs 12 units of stock. I am going to sell the 10 at 32 that I bought in January. Sell out all that gone. See there, 10 at 32 each. Cool. That leaves 2 because the person needs 12, but this is 10. So the person need to get 2. How the 2 are going to go? Oh, for my international students, how will I take care of the other 2? It will be this 15 at 35 that it will be taken from. So it's 2 at 35, which leaves what? When you take 2 from this 15, what is left? 13. See there? Stock after each transaction, 13 at 35. Let me go over that again. The person needs 12 units of stock. I am going to sell them the first set of goods that came in, that was in January, 10 at 32. See there, under the issued column, this shows how the stock was issued. So we give them first the 10 at 32. That means all of January is gone. Cool? That leaves 2. Then we're going to give them 2 out of the 15 that was bought in May, which leaves 13. 13 at 35. 13 multiplied by 35 gives me 455. Okay? Awesome. In November, I bought 25 items at $50 each. What do I now have? I have the 13 at 35 left over from June. That is still there in the storehouse, sitting down. Then the 25 at 50 that I just bought. So the 13 at 35 is 455, and the 25 at 50 that I just bought is 1,250. In total, I have 1,705. Okay? Then comes December. For December, I have 24 units of stock that I need to sell. How am I going to sell it? Using FIFO. So if you look right here, you would see what I have. I have 13 at 35 and I have 25 at 50. Using FIFO, I am going to sell this first. 13 at 35. See there? 13 at 35. That's the first set to go. So the person needs to get 24 and I have given 13. That leaves 11. How will I take care of the 11? The 11 will come from this 25, which leaves 14. Let's go at that again. 24 units is the amount to be sold. Using FIFO, I am going to sell this 13 at 35 first. This is left over from June. This is the item I bought first. So I'm going to sell this 13 at 35. See there? Right in the issued column. So if I'm to sell 24 and I've issued 13, that leaves 11. Where will the 11 come from? The 11 will come from this 25 at 50 that was bought in November. When I give this 11, from 25 it leaves 14. 14 at 50 is 700. This 700 signifies closing stock. LIFO says last in, first out. Therefore, with LIFO, things are going to be a little different. But let me give you a heads up. For FIFO and LIFO, you will recognize that the first 2 months, it's the same thing. Because the items were bought, calculated, and placed in the amounts column. Okay, so for January and May, it's the same thing. The difference starts with June, when the first item is being sold. So in June, 12 items of stock were sold. Now LIFO says last in, first out. And of January and May, the last set of goods that came in was 15. 15 at 35. Okay, let me say that again. LIFO says last in, first out. Of these two, The last set that came in was May 15 at 35. Therefore, this is where we will take from to issue for June. So for June 15 at 35, that's where we took it from. So 12 out of the 15 leaves 3 at 35. Now look at this little section. You remember that this little section records what is left, pretty much. So after we issue the 12, the 10 at 32 from January that is still unsold came down. That's there. And then 12 out of this 15 leaves 3. So 10 at 32, 320, and 3 at 35, 105. Add these two together, you get 45. Okay? Awesome. November, 25 units at $50 each. What do we have now? We have the 10 at 32 that is still unsold from January. We have the 3 at 35 that is left over as a result of what we sold in June out of May. And we have 25 at 50 that we just bought. So we have 320, 105, and 1,250. Add that all together, we get 1,615. Now we are at December. 24 units to be given. How are we going to issue this? Last in, first out. The last set of goods that came in is the first to issue. Now the last set of goods that came in is the set that we bought in November. 25 at 50. So if we're going to give 24 out of this, what is left? We have the 10 at 32 still unsold from January. We have 3 at 35, which was left over from May as a result of selling in June. And we have 1 left from November. How we get this one? This is 24 that we're issuing for December. Taken out of this 25 that we bought in November. So 24 from 25 leaves 1. So we have the 320, the 105, and the 50. Add it all together, we get 475. And remember again, this represents closing stock. Hence the double line that it's on. Now for AVCO, average cost, the process of calculation in this method is completely different from FIFO and LIFO. Now, I offer you this strategy that will help you to calculate this a whole lot easier. So, take January. 10 items at 32 each. What is the value of this? 10 times 32, 320. Far right, 320. Cool. How much items did we buy? 10. 10. What is the average cost per unit? To calculate that, simply divide the value of stock by the number of stock. Say that again. Simply divide to get the average cost per unit of stock. Simply divide the value of stock by the number of units in stock. 320 divided by 10 gives us 32. Okay, cool. That's May. That's January, sorry. May. 15 items at $35 each. This is now the trick. If you look down here, you will recognize that you see 845. Where did that 845 come from? It is the total of 15 multiplied by 35 plus 320. Now this value is not placed there. There is only one totals column, which means when you multiply 15 by 35, you must then add it to what was there before so that you can get what you have now. That's one of the little trick to this method. Let's go over that again. For January, we had $320 worth of stock. Okay? May, we bought 15 items at $35 each. We must calculate the value of this, 15 multiplied by 35, and then add it to 320 in order to get 845. That must be done straight out. Okay? Cool. So that's the value of stock we have. How much stock in total do we now have? 25. We had 10 before and we just bought 15. 15 plus 10, 25. What is the average cost? Divide 845 by 25 and you get 33.8. Now we get to June. Now remember, the basis of average cost is for each purchase or sale of stock, the average cost for what we have is calculated, and it is calculated at every step. And when we say at every step, we mean at every interval. When you purchase, it is recalculated. When you sell, it is recalculated. Okay? So when we bought 15 units in May, we had recalculated the average cost and we got 33.8. Now the basis of this method is when you are selling stock, you sell at the last calculated average cost, which in this case is 33.8. So 12 items for sale in June, and we're going to sell them at the last calculated average cost, which is 33.8. 12 multiplied by 33.8, and you subtract that from 845 to get what you now have. Let's break that down. 12 multiplied by 33.8 gives us 405.6. That's the value of the items that we're going to sell. How much stock did we have before this sale? 845. Therefore, if I have $845 worth of stock in the storehouse and I am now going to sell $405.06 out of that, how much do I have left? 439.4. Cool. How much stock do I have left after this sale? 13. How do I come by that? I had 25 before. Here you go. 25 before. And I just sold 12. That leaves 13. What is my average cost? Use up a formula. Total value of stock over number of units in stock. 439.4 divided by 13 gives me 33.8. Okay? Off to November. 25 units at $50 each. Remember, you do the calculation for what was received, then you add it to what was there before. Therefore, 25 multiplied by 50 gives us 1,250. That's the value of what we just bought. Okay? But what did we have there before? From June, 439.4. So, if we just bought $1,250 worth of goods and we had 439 there before, the total of what we now have is 1,689.4. Okay? Finally, in December, my apologies. The number of units we have for November is 38. How we came to that? We had 25 that we just bought. and there was 13 there before. 25 plus 13 gives us 38. What is the average cost? 1,689.4 divided by 38 gives us 44.5. Okay? Now we can go to December. 24 items to be sold. How do we sell it? At the last calculated average cost. That was 44.5. So 24 multiplied by 44.5 gives us 1,068. That's the value of what we are about to sell. Now, what's the value of goods we had there before? 1,689.4. Now, when I have sold my goods, what am I going to be left with? 621.4. Okay? How do we calculate this? We multiply 24 by 44.5 and subtract that value from what we had before, which is 1,689.4. Okay? And we have agreed that that brings us to 621.4. What is the value of stock I now have left after my sale? 14. How do I come to that? This is what I had before, 38. This is what I just sold, 24. 38 minus 24 leaves 14. And finally, my average cost per unit, 621.4 divided by 14 gives us 37.8. Finally, for the process of calculating profit based on the methods of stock valuation, it will look like this. And if you look at this, you will recognize that this is a simplified income statement. Now, each stock valuation method will yield a different closing stock figure. As a result of that, each stock valuation method will give a different gross profit. Now we do that process, or we calculate that, simply by using the simplified income statement you see here. But let us plug in some details. This is the example that we used. This 2095 represents purchases. As you can see, we're over the bought section. So this figure represents total purchases. 1, 2, 3. Same figure for all three. Okay, good. 2,340, this figure right here, represents total sales. This is the sold section. So total sales. 1, 2, 3. Same figure for all three. Okay? But this represents closing stock, and naturally this is going to be different. So at the end of FIFO, closing stock was 700. At the end of LIFO, it was 475. And at the end of AFCO, it was 621.4. All we simply do is carry out the calculations. So closing stock from purchases leaves 1,395. Cost of goods sold from sales leaves gross profit of 945. Same principle applies to LIFO. 475 from 2095 left 1,620. Take that from sales, as you know it, cost of goods sold from sales gives gross profit of 720. And for AFCO, 866.4. Now, according to this calculation right here, this would be used to determine which method of stock valuation yields the greater profit. And the answer to that would be FIFO. Why? Because FIFO has the highest gross profit of the three. Okay? And the purpose of this is twofold. One, to determine which method would be the best method to use, and we would determine that by doing the calculation and identify which one yields the greater profit. And it is also necessary to get an idea of which stock valuation method is best to use. Because after all, the intention of every entity is to make as much profit as possible. Therefore, if you can determine which method yields the greater profit, then use it. That's the best thing to do, wouldn't it? Yes, it would. That's it for our lesson for today, stock valuation. I hope the information was clear, concise, precise, to the point, and I hope that you learned something. Now, as usual, if you have any questions, queries, concerns, please feel free to share them in the comments section below, and I will respond to you directly. In addition to that, I strongly advise that as often as you can, you practice the principles that you have been learning. You may be required to call upon previous knowledge in topics to come in an effort for those topics to be clearer and easier for you to understand. Okay? So with that in mind, just a word of encouragement. As much as you can, set aside quality time to practice the principles so that as we progress, you will be able to grasp the concepts quicker and easier. Okay? That is all for now, folks. Until next time, walk good, stay safe.